Hello, welcome to this short video wherever you are joining me at this hour. This video is titled Understanding the Big Picture and Changing Market through Economic Dynamics. We can see what is happening globally and the market is reacting in that direction. We are seeing different economic cycle. We are seeing also market cycle. At the same time, we are seeing also sentiment cycle. You can see that there is changes, and these changes is what you need to understand, so that at any given stage of the economy, of the market, or technical pattern, you should know what to do at that particular time, so that at the end of the day, your bottom line is what's very important. I will tell you that in any situation, either economic situation, political situation, there is always opportunity for one to make money. But if you understand these cycles, understand these big pictures, understand the chart patterns, understand the situation of the market, it now become easier for you to know where you should be, which industry, which sector, which group of strong group of stocks that you should position, and which individual stocks also that you should look at. These are the things you look when you are investing. Because I tell you, with continued hike in rates, rising inflation, this is going to affect the economy. And for you to know that even when there's rising inflation, rising interest rate, there's also some industries and individual sectors and some stuff that will benefit from this situation. That is why you need to understand what we call, as I said earlier, change in the market cycle, change in the sentiment, and also change in economic cycle, so that these things will guide you to know exactly what to do by each moment. As we speak now, I want to look at the different phase of what of the economic cycle or economic phases. I will tell you earlier that in any economy, what we call early expansion, we have mid expansion, and late expansion, and that will lead us to what we call early contraction and also late contraction. And in these different phases of the market or the economy, sorry, or there is there are different sectors that also benefit from such cycles, from such zone. And you want to identify which sector have done well before now, which sector has opportunity to also to run. Because as we are looking at different cycle of the economy, there are different sectors that benefit from this economic cycle. You want to know where is your economy, because what is happening in here back in Nigeria is different. Or what I mean different, that while maybe in different market cycle or different economic cycle or sentiment cycle, but you need to understand in that environment where you are, what, because you are trading in that environment. The pattern the kind of strategy I will use here in Nigeria might be different from that what in US or in Canada or what on Europe. But because you understand the economic pattern, you understand the market cycle, also you understand the sentiment cycle, or change in sentiment, you understand where to be at a given time. As to speak now, if you really want to know where the economy is or factors that drive the economy movement of cycle, you want to look at the interest rate, you want to look at what inflation, you want to look at what industrial output or industrial production, to know exactly. Let's also look at the GDP to exactly know what is happening what in that cycle or in that economy at that particular time. If you look at history, and this is what we call almost 2013 to date, and this is what we're using a monthly chart to give us a clear and easy picture to know or understand what I'm going to discuss this hour. When I said that you want to look at the use of factors that also determine which cycle we are. When you say you are in early expansion of the economy, at the period of early expansion of the economy, the what we call the interest rate is relatively low, and at the same time you see that inflation is also relatively low, and that also support what will support the output. You see that the national output at that time is what on increase, and this is because of what cost of production is relatively low, and that at that stage you see activity, and there's an industry that benefits from that stage. At that you can see that capital goods and others, investment in transport and all those stuff will be very good at that stage. Also, when we move toward when we look at the mid expansion, at mid expansion, you see that interest rate is gradually looking up just little, and inflation is also on a still on a very low. Inflation is still remain low when at the mid expansion, but at that time also you can see that national output is also on the rise because also of relatively low interest and relative war. And when it's low interest, you can see that people have access to funds and expansion, and inflation is also purchasing power is still there. Then at the late expansion, you can see that at that particular time, at late expansion, you can see that things have started changing because interest rate has started also looking up on a faster move. You can see that interest rate is going up, and while inflation at that time also keep on a smaller move, and at that time you can see that output also has gradually become constant or become flat or trending, but in trending in a kind of a sideway movement in terms of output not going up, not going down, because here cost of borrowing is becoming what high, and that is why I see it will reduce the kind of productivity, because at this late expansion, as things have started looking out from shape, and inflation also has started looking up in that late expansion. But at early contraction, you see at this point, at early contraction, you see that at the face of economy, interest rates is already high, and also inflation is also continue to increase, and hereby and cost no productivities or production to what to start dropping. You see that industrial output at this level is not as good as before, because cost has increased, inflation is on the rise, and at the same time interest rate is high. Cost of production become high, and that at this stage you see things start going down, and things are already getting to a bad situation. But the final stage is what we call the late contraction, and this is finally to lead to what kind of recession or depression, whatever you call it. At this stage, you see that interest rate is on the gaga. You can see what is happening globally today, because inflation is on the rise, interest is on the rise, and we know the factor that brought all this as a result of the Ukraine-Russia war, that kind of brought a lot of distortion in supply chain, and that also trigger a cost of production. At the same time, in this stage, when you see that cost of production is on the rise, and also in terms of interest, which is the monetary policy, because across the globe now we're seeing that there's a lot of monetary policy tightening here and there just to manage inflation. On that note, you see this also pulling down what productivities, because of cost of what production is high. At this stage, you can see that things are not looking good at all, because cost is on the rise and people purchasing power is also down. That is why you, as an investor, you need to know which sector will benefit from this kind of stages, and to also be able to notice the sector that will benefit, you are good to go. And that is why this morning I want to quickly look at what we have seen as an analyst and where we should be. Actually, as we speak now, I will tell you that our economy is at what the early contraction. We have seen data that emanated from the economy that showed us this is where the economy is. Don't forget that if you look at the GDP for the past 4 quarters, you can see that it has been on a decline for the past 4 quarters. We have seen that look at the GDP for, especially for the previous quarter 2021 fourth quarter, and the last one for Q1 2022. Look at the movement on this quarterly basis. Let's start from what we have for this period, especially the last GDP for Q1 was 3.11. The previous one, which is the last one for 2021, which is the Q4, was what was 3.89. Look at the other one was almost 4.01. The other one, can see there's continued decline on a quarterly basis. It tells that this is a sign that we're already in a contraction. Not only that, if you look at what we call purchasing manager index, you can see that even on a monthly basis, that also remained also being on a decline. These are signs of what on contraction. And when I say we are on early contraction, even going to late contraction, because if there's not taken with the rising inflation and some high interest rate, yes, it's going up, but you can see that before now, this is not the first time we have seen our interest rate at 14%. Yes, it was adjusted in recent MPC meeting that was held in recent time yesterday. That also has said that which sector will benefit from this act and where we should be as an investor. That's why I said you don't need also to panic at this moment. Rather, look at your portfolio and see. When I say look at your portfolio, you want to know what kind of stocks that have and which sector are they, because we're going to discuss the sector that benefit from this change or this spaces, so that you know exactly what to do at the right time. And when I said that we are the early contraction, here we're talking of also using only just the economy now to look at. We have not gone to see the market cycle in terms of no. I've given you the cycles on the economy, but for those in the market cycle or market phases, we have the what we call the accumulation phase, we have the markup phase, we have what the distribution phase, and also have the markdown phase. If you come to chart here, because what I'm saying now, I want to use the chart to tell you this markup phase, the distribution, and what contract distribution and decline. I said market has the economy has about 5 phases, the market has 4 phases. Also, the sentiment or technical how we call the overbought and also the oversold region. These are things that I want to look so that you will know exactly where the market is and where the individual sector is and also where individual stock is. This will go a long way to guide you. For we have discussed for that of the economy, then we want to look at the market pattern. Look at the market pattern or phase of the market. This from almost 2013, the date or the yesterday. If you look at this pattern here, you can see what we call a decline here. You see an uptrend. You see also a decline phase. Now so say, okay, this is a markup. That's also a decline, a markup. You want to understand which phase is the market as we speak now. You can see that I said mention accumulation. If you look at this chart here, from here, let me say from here to here, I'll say the accumulation phase. This was when people are still buying. The market is not up, it's not down. You can see it here, no, at this phase. But there was a markup all to this time. And market spread some little distribution here before it continued the uptrend. But at this point, market had a little distribution phase here for 2 times before market considered, because if you look at this moving average here, when it cut it down, that confirmed a decline phase. The first one, this one will be distribution profit taking. Once it cut down, it confirmed a decline. It went through down here before, so you saw some this attraction when the market hit about 11 years low. What happened again? Followed by what? Accumulation, 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 before you now see another markup. Then here also saw another kind of distribution phase here, for like a month. Like this is a monthly chart. People were still selling before it confirmed also phase. Before finally break it down, you now see now a decline phase already. But market stay at this phase, started also going up, and this also a markup phase. I can see that the market has been so on the markup phase or bullish for all this month. So I think that from 2021 July, there is almost a year now. You can see that market has been in a markup phase. Looking at the big picture here, you can see that market has been off from almost a year now. Market has been just down, 3 months, down for 3 months, for almost from July. I can show you here. You can see the July here. July, see all this one. Market was down slightly in the month of December, where we did see central rally. Also in the March, where also the earnings season we were expecting, but in April, after seeing the number, we saw that the full year numbers were beat the market expectation. You can see the uptrend here. Now we saw a correction after we have seen April and May having a strong rally, correction, profit taking. Now we can see that its market has also broken out the 52,000 mark to sustain on that uptrend. Yesterday, we saw an announcement that came from the MPC meeting at the end of the 2 days meeting. There's that interest rates have been adjusted. You can remember even the May, when it was adjusted in May, that slowed down the market because we saw kind of high interest rates, and this also will benefit the physical market. Market have enjoyed low interest rates all this while, but we're not saying that market trying to resist the decline here. But we believe with what that announced yesterday or recently by CPN, that also will change the face of the market. But this will not send panic to anybody that understand the market. That's why I said I want to tell you the phases and which were just explained. Then if you want to know about the overbought and oversold region, which also is a sentiment thing. When market gets overload, sentiment will change. When they also get to the overbought region, sentiment will change. And you use all other indicators to look at that. You can use what we call a relative strength index to know is market at overbought. You can also look at your CCI, which is the channel commodity index. You can also use that what we call true strength index. All you can use also MACD, because these are momentum indicators to know at the peak and also at the low. When you see this will guide you to know exactly what to do. like I just said, when now I've confirmed that we are already in a decline, in a early contraction, and we know that there is factors behind it. It's very important for you to have this at the back of your mind, because at different states of the market, there are different what factors behind that stage or that cycle. We know we have told you about interest and all that, but now globally, what is driving this change in the market cycle is because of the what is going on in Ukraine and Russia, and also the continual high interest rate to manage inflation. And in all this, which sector will benefit from this at this stage now? At this stage we are, because yes, we are in any season already, but which sector will benefit from what I've just discussed? But if you look at the history of our market from 2007 to date, which I've discussed earlier, you see that inflation rate has hit as high as 18.92 before now, and the lowest of 4.6. And you see that in 2017 here alone, market hit about 2017 about 18.72, and that same 2017 you saw that market also gained almost 50% in that same month, and inflation was already at that 18.72, which is slightly above what we saw in the month of June, recently released by Bureau of Statistics. Can tell you how can you manage this audit. And in interest rate, which is the MPR has been between 2007 till also 2022. The highest have been 14%, which were but in 2016 it has been at that 20 at that point, and that was the first time also that our economy had what we call in 2016, that the first recession after many years, after like 25 or 25 22 years without inflation. That was in 2016. But see, that same year, so that the next year the market economic recovery, that's early expansion, market also gained. I can tell you that still inflation was at that level, but inflation was adjusted down during COVID-19, around 2019. Then that remained around the 11.4. This hyper increase we just saw in the two last MPC meeting in May and also in June in July. Sorry, and that means you as an investor you have to cope with this. As I've told you, there's no cause for alarm. Rather, you look at the sector that benefits what is happening and position. And I'll tell you that in this kind of situation, at the early stage, at the early contraction, we already see declining GDP. We also see declining productivity. You can see the result that came to the market. We already see weak consumer sentiment, and at the same time high inflation. Also, we are seeing a rising interest. That means sector that we should look at this point, looking at what is happening, because you need to look at industry or sectors where the consumer the demand for their product or their service is constant. That's why there is increase in price or adjustment in anything, because of the essential of that commodity or that product. There is high demand for it. At this stage now, we are entering the early contraction, which also lead to either recession or lead to deflation. The sector that we should focus our eyes on is one. We should look at the healthcare, the utility, and at the same time the consumer, consumer staple, food, at the same time communication service. These are very things that go, but these are essential. No matter what they are going to be demand for these services, and that we need it, and for that, whether there is cost an increase in price, there will still be demand. That means this company, when there's increase in demand and they are making money, they are going to release a good number. You know that price always feed on earnings. Is going to impact on them. And don't forget that now that we're seeing a form of a hike in rates, we're going to see that the banks will be the place you as an investor should be going. That's why I said this period is more of what continue what we call sectoral rotation. And sectoral rotation also, you need to do it with wisdom, because you don't need to look at those this sector, look at those sectors who are the leaders in that sector, look at the numbers and see. Also, there are some stocks that are defensive. You want to know, you want to see, is the market at oversold region now, overbought region. These are very important things not to do. And also, there's a time also when you are doing what we call sectoral rotation, it is not always that market will move directly. That's why I said you need to understand other things that also support this rotation. When you are doing rotation, market that when you are selling off those sectors that you know that they're going to do well, and also move to where you see you are today that they're going to also do well. And don't forget that at times it takes the economic cycle a longer time to catch up with the market cycle or the market pace. And that market also could also fail to digest for some economic news that are efficient, and also mistiming of the market cycle can also cause a lot of harm. You need to, or that is why you need to look at the technical analysis as always, and that's why when I encourage people that you need to know how to combine fundamental and technical so that you're able to time the market. You know whether the markets are oversold and overbought region. You need to understand what is peculiar with this sector, what is peculiar with this company, and any time you are looking at industry or sector, you need to look at who are the best performers there, what is their numbers, and also when you see this kind of situation, you don't go for laggard, you don't go for a company where they have close substitute for their product, because if prices of goods continue to go up, those that are selling lower price will be patronized. That will affect the supply, some demand for some companies. Their goods remain on the shelf, and at the end of the day, they're not able to pay you good dividend that will support the price or produce earnings that support the price. That is why you need to understand how to. That's why this video is available for you to guide you. There's no cause for alarm, but rather look at those sectors like here in Nigeria. I think the sector that we should keep our eyes now. The first sector that now we're going to see going to the week, going to the quarter rotation. And also, I said it earlier in the master class. I said it also in most of our discussion that this is the time that with this hike we're seeing. Yes, the fixed income of the sector will be a bit robust for people, but the hike is going to support a sector which will go to the bank will be the first beneficiary from this hike. And that means that going into the future, we're going to see a better number for the banks. We have seen flat numbers previously, but I believe that with this hike in rate, yes, cost of fund will also increase, but at the end of the day, we have a positive net interest income. That will also be good for the banking sector. For me, it's not for you to look at those sectors that banking sectors that are grossly undervalued, and also they are consistent in dividend payouts, especially those that pay dividend and their earnings are looking up, and also those that are also building capacity that are going to impact their number at the end of the day. That's where you should also start between your tents. But I believe that for investors, there's no cause for alarm. What we call a sectoral rotation will continue, but don't invest blindly. You must know how to combine what your technical and your fundamental. Read the sentiment in the market. That's why at this earnings season is already on. Stop as the earnings are hitting. No which company or which sector will sustain that tempo. But I believe that the sector that we should also be looking at this time, but looking at what the oil sector, we know what is happening globally, and because price of energies are high directly, and because these commodities also are essential because to heat up our manufacturing sector, no matter even though their production will be dwindling because of demand is low, but they need all energy. That's not only that, those sectors that also we have seen recent hike in fuel pump price in Nigeria, and you know that those companies that have this product under, but not automatically going to have another round of markup in their prices, in their improved profit margin. For me, these are the three sectors we look at. Look at the oil sector, look at the financial sector, especially the banking industry. Look at the leaders in that sector that have good earnings, a good chart pattern, and good sentiment for their products. These are for their services or for the stock on the exchange. At the same time, look the work of the healthcare sector is essential at this point. Look the area of agriculture, and also look at the area of communication service or what we call the ITC. They are very key. Industrial goods as a result of our infrastructural gap. But believe that if as government is borrowing and and also have already accumulated debt, I believe going to the future, not immediately going if this situation persists, there might be slow down in infrastructure because it is when you have money, but the way the government is borrowing. That's why I said even the fixed income market, and fixed income market, if you want to really benefit from it, it's for those that has billions. Yes, I'll tell you, for retail investors that are paying 5,000, you might not feel much, but if you're able to take decisions on defensive stocks and those stocks that that have potential their price will go up. As we speak now, we're still seeing some spikes in the market. I will tell you that the market have sustained this trend is not because of only earnings, it's because of those high cap stocks that also were seeing improvement in their prices that have support the trend. And this high cap stock has about almost 17% of the market. You can see how it's also influencing the market as we speak now. For me, there's no cost for around, but rather let's take our investment and stay in those good sectors. For those that attended the master class, there's no cost for you to panic. You are in the right sector already. If you look at the sector that we discussed there and the stock where, just keep your keep calm and watch market. That's why I said you don't invest and go and sleep. Invest and watch what is happening and watch market direction and what is unfolding in the market. But for me, for what I'm seeing, There's no cause for alarm. Yes, it might be pre-election here and there, and also political influence uncertainties. But in all these, in that uncertainties, political influence, there are sectors and industries and individual stocks that will still deliver value. But what you do, what you see, that's why I say you always be the market so that you do the rotation, even from sector to sector. If also you can set down some stock and move to the other, set down stock in some sector. Also, this is why you have to be in the market and see, because most times in this kind of environment, we are seeing increased volatility, and because there's volatility, there's up and down. Then all you do, your tech analyst will tell you where you can put your 10, seeing momentum, seeing sentiment, and also seeing what the earnings of this company. That's why the first combination of fundamental and technical and sentiment report will make you to stay ahead of the market. And that's why we provide them in Invest Data. We look forward to see you at the top. With this, there's no cause for alarm. Every fear should be taken care of. And I believe that all you do, reposition your portfolio to sectors we have just mentioned and stay calm and watch the trend and watch the video. As I said, look for the leaders in terms of performance, in terms of price, in terms of volume, and in terms of what sentiment. This will guide you to know exactly where to put your 10. For those that really want to also know the stock, you are free to subscribe to the buy and sell signal. There you can see the stock will pick in Invest Data. That's why in all this, there's a way you can also benefit by subscribe to see those stocks to buy. Now we have seen even the stock we have released recently for buy and sell signal, the one we released for the Q&A session, the previous one. These are stocks that you should take position and watch and don't panic, and also don't be greedy. Set your stop loss in all these. At the same time, apply your entering and exit strategy. What I mean, that means don't fall in love with any stock. At the same time, the market that give you profit, you can take it from you if you fail to take that. That's why your profit target is very, very important as you're entering the market. These are what should guide you at this season. But rather than you panicking or just selling down unnecessarily, stay in good stocks and watch the market. And this market will still deliver value between now and end of the year. Because factors that brought the market to this level are still intact. Yes, despite the oscillation, those high cap stocks are not declining. And if there's no improvement in their numbers and still moving up, the market might likely. Yes, correction is good. It takes opportunity for people to buy. But that when you see correction, don't be panicking because of correction. It's part of the market. People selling down in position to take profit is necessary. It's part of investing. The price of stock will continue to go up. These are the followers on life like you know what I said about the computer warehouse group. What I said about academic press. What I said about NACO. You can see all of them because when the stock have returned good profit, don't be greedy once you want to follow it. No, you can take stock that has good fundamental gradually. For those that don't rally because they either one news or one corporate action, you join it and you rally it with the stock and also take your profit and smile to the bank than that same stock taking you up and bringing you down, because the market that give you that profit, if you fail to act, that's the market to take it up from you. See you again, and I pray that this period until the next MPC meeting, I will see the any season before we can change our strategy. But keep on investing and also keep watching the market. Never invest and go and sleep. Keep your eyes on what on the market direction is very, very important. Thank you and God bless you.